Well, thank you very much, first of all, for having me. It's a great honor to being part of the International Investment Forum and presenting to you SDM Group. My name is Tobias Bodamer, and I am the CFO of the group since May 2025. For those of you who don't know SDM, we are a provider of private security services. SDM SE, the holding company, is listed in the non-regulated market in the quality segment MXS at Munich Stock Exchange. We have currently 3 operating affiliates that are active in the segment, and let me guide you through the presentation, how we have set it up. First of all, I'm going to talk a bit about the private security services market in Germany. Secondly, I'm going to present to you SDM Group, how we currently stand, including some of the numbers, and then I'll go over to the growth strategy of the company. The private security services market in Germany, as you can see, has been steadily growing in the last years, 15 years almost, in 2024, reaching 14 billion of market volume. It has been more or less linear growth on that side. In 2016, there was a spike in growth that had to do with the refugees coming to Germany since 2015, where there was a significant increase in demand for private security in refugee camps, and that was the reason for that spike. But if you flatten that out, you can see has been a very attractive growth market. Growth has been accelerating actually in the last couple of years, as you can see here. And the market is also believed to continue to grow with between 5 and 7% per annum in the coming years. Why is that the case? That there is further market growth expected, which obviously gives growth opportunities in the organic space for innovative security services companies. There are 3 main reasons for that. First, obviously, the current threats situation. As we all know and can read daily in the press, there is an increase in geopolitical threats, predominantly from Russia. Not only, but obviously they're the closest. We have seen over the course of the last weeks and months the drones that entered, drones and planes entering NATO area, including Germany, leading to shutdowns in airports. We have seen a GPS jamming in the Baltic Sea, which is affecting, on the one hand side, the Scandies, but also Germany, that there are ships getting out of their usual routes. There is increased sabotage in various areas, and as such, there is increasing geopolitical threats, and we'll come to that a little later as well. There's an increase in economic threats. We're talking industry espionage affecting everyone. This, on the one hand side, has obviously technical components, so IT security, but also physical resilience, which means people being able to enter buildings, also people being entering development sites where they shouldn't be, and adding devices to buildings that are being built that shouldn't be there. there is an increase in politically motivated and extremist violent crimes, as recent data has shown. And as we all know, there is a labor shortage in the public side, so military, police, and border protection. So there is a need on the public side for support from the private sector. The second reason for growing market dynamics is the regulatory side. You can see here there is a NIS2 directive, standing for Network and Information Security Directive, by the European Commission. This is being put into law of the respective countries. In Germany, it's called the CRITIS Umbrella Act, whereas CRITIS stands for Critical Infrastructure. And the critical infrastructure is anything, any organizations and facilities, for those of you who don't know it, that are of major importance for the security or of major importance for society, and where failure or impairment of these organizations and facilities would cause a sustained shortage of supplies or significant disruption of public order, safety, and security, or other dramatic consequences. What is included in that critical infrastructure is inter alia energy sector, health, transportation, food, water, finance, IT, telecommunications, and so on. So basically, more or less everything that we need for our society to function. And if you look at that, how it's, well, the public sector or the society is still working in Ukraine after years of war, this tells you how important it is to have critical infrastructure being able to work. So the CRITIS 2 or the CRITIS Umbrella Act has been going through the legal side and will be implemented by the end of this year, being effective by next year, increasing significantly the number of companies that will be included as being defined as critical infrastructure. To give an example, on the health or on the hospital side, basically every hospital with more than 500 beds, which is not massive, will be included going forward as being part of the critical infrastructure. Then, as we all know, on the regulation side, a lot of it being discussed in Germany is the compulsory military service, which will obviously lead to a number of things. Barracks that need to be built. Yesterday, the Ministry of Defense just announced that there shall be 270 new buildings, so new barracks being built in Germany starting 2027. Obviously, these buildings during the time of being built need to be protected, for instance. But this also means logistics in terms of transportation of troops, transportation of food, all the logistics that is associated with that. The third main driver for additional market growth is a shift in technology, which means first and foremost, big data and AI. So where in the past, surveillance video analysis has been done by people, mostly watching over what is happening on camera. This is being done more and more by software or by AI, which are able to detect threats at an earlier stage, obviously able to work with a lot more data than people could do. There is hazard detection, so a prognosis basically on where there is a threat or could be a threat, depending on the analysis of big data from video, and obviously agentic AI, which is something that affects basically more or less every business model. Second part of the technology shift is automation. So robotics and drones replacing physical labor to a certain extent, and specifically drones that don't have to be guided or steered by a physical person, but steered by AI that is connected to the overall security system, will be one of the game changers going forward for the detection of threats and the monitoring of physical plants. What else? Besides the market growth that we see, the market itself is quite interesting for growth potential through buy and build strategies. In Germany, we have a highly fragmented industry. Told you before that the market size is at 14 billion revenues. There are only 15 companies with revenues exceeding 100 million. The top 10 players in the market have a combined market share of 29% only. And the supply side is highly fragmented. So it's dominated by historically grown family-owned companies. Many times, I mean, we've heard it on the industry side as well, that succession is one of the reasons that could trigger M&A in the old economy field. And this is comparable here as well in our segment. This makes it mostly attractive for small to mid-sized companies or acquisition in the small to mid-sized space, which for us means in terms of revenues, we're talking between 5 and 10 million. Why is this the case? Their acquisition multiples are quite low, and their level of technology is also quite low. So the ability to increase services at these companies when acquired is quite high. So the structural characteristics of the market make it quite attractive for traditional buy and build strategies. A bit about us, SDM Group. We have grown through the acquisition and integration of 3 security services companies between 2019 and 2023. We're headquartered in Munich. We currently have roughly 700 employees. We IPO'd in 2021. Our annual revenues are north of 40 million, and we're acting through 3 key subsidiaries, one in Munich, the other one in Cologne, and the other one in Bavaria, close to the Austrian border. The senior management is consisting of 2 board members and 3 managing directors in these operational units, who are also part of our executive steering group. What are the key services we're offering? We do on-site guarding services. This is basically for our industry and public clients. This is connected to our 24/7 security risk operation center that we operate. So there we have the video surveillance, but also the alarms, alarm detection that come through in this risk security and risk operation center. This is enriched with mobile response and guarding services that we're operating in these areas and for these clients. And we have a security services connectivity for AI. So the ability to, as mentioned before, to use AI for supporting surveillance, but also for adding other technology on the client side. We have a wide range of additional services that we're offering, from valuable transports and courier services, trade fair and event security, specialized guarding services that are usually more complex and with higher risk, and risk management, security services, and consulting, where we offer security implementation for our clients for instance, at an early stage when they're building a new corporate building, and we can assist them in finding the right design from a security aspect. Let me briefly go through a couple of the numbers. The year 2024 was the first year that we published a consolidated audited group account. We are publishing under German GAAP. So this has a couple of implications that I'm going to come through. The year 2024 was also a turnaround year. Revenues at one of our affiliates decreased by 45% in 23 in the wake of the integration after the acquisition at the end of 2023. The measures taken by the company there were that consultants were hired to improve the situation, which took place in Q3 24. Then there was a significant increase in sales activities starting in Q4, and finally a change in management in the operating company, which was implemented in Q1 and 25. The important aspect is that these measures that have been taken, results can already be seen in the first half of 25, which sees an increase in revenues by almost 40% versus the first half of 24, and an increase of EBITDA of 69% compared to the first half of 2024. And this is on a non-adjusted basis. The EBITDA first half of 25, as you can see, is at 1.2 million. If we would show the adjusted EBITDA, there's about 300,000 in extraordinary cost attributable to restructuring of the company. So if we would look at the adjusted EBITDA, this would stand at 1.5 million, or more than twice of first half of 2025. A couple of things I wanted to add here on the numbers side. If you look at the EBT, you can see there is if you look at the EBIT, you can see that there is, as we are publishing under German GAAP, there is a depreciation that we have to take on or goodwill amortization, that we have to take on the group level. This is attributable to the goodwill as part of the acquisitions of the past. If we're looking at the financial statements of SDM SE, so the holding company, there is no mandatory amortization and depreciation in terms of goodwill, but there is if necessary, there is an impairment being done. And at the end of 24, there was an impairment test being done on the valuation of the affiliates, specifically on the background of the sharp revenue decline that happened in 2024 with that one affiliate, with the result that in agreement with the auditors, there was no impairment necessity. So meaning that the valuation of the affiliate is stable. So we see that effect on a group level. As long as we'll be reporting under German GAAP, which we are planning to do, we will also always see this effect as long as we continue making acquisitions. And finally, as you might wonder, the taxation seems to be quite high. This is attributable to the same fact that on a individual company level where the taxation is being done, there is no such depreciation amortization. The key data of the share, I'm not going to tell you too much. We are listed, as we said, Interlayer and Xetra, and the quality segment is MXS in Munich Stock Exchange. Our market cap is roughly 8 million. Let me briefly come to the growth strategy. We have 3 pillars for sustainable growth. On the cover page, you've seen our slogan, buy, build, and transform. So one is doing acquisitions. The other one is obviously doing smart integrations and increasing value creation for the customers through consulting and focus on sectors. And the third is the transformation, including the technical transformation. Why do we have a sector focus in our growth initiatives? First of all, within our growth initiatives and the sectors, we aim to establish SDM Group as the first point of contact for customers in these sectors. They're all sectors in Kritis for the critical infrastructure, where we have a long-standing track record of between 15 and 25 years. One is energy and utilities, the other one logistics, and the third healthcare, where we have, as I said, long-standing track record and large cap clients. And the defense sector, which we are establishing as our fourth pillar, as a driver for additional growth, which is a kind of a combining the other key sectors that we are focusing our growth on. For instance, in the defense side, you can think about the logistics, as I've mentioned, that is necessary for the defense. There's military hospitals where we have the healthcare expertise, and also on the energy and utility side, there's obviously a necessity where we can leverage our existing experience into the defense sector. What are our USPs compared to our competitors? We have experienced in-house security specialists, a long-standing track record in these core sectors. We are partnering with high-ranking industry experts, both on the defense side and on these other sectors. And we have a cross-industry network within our management team. So how do we implement the growth strategies? We focus on organic growth through the sector focus and the expansion of the service depth on our client side, plus the consulting business. We do complementary acquisitions in specialized companies in these core sectors with a strategic fit to our group, with a target size of companies of sales volumes between 5 and 10 million. What is our financing necessity? First and foremost, it's working capital. Working capital financing is important for us. Usually, the DSO is between 60 and 90 days. What are our key assets? Our key assets are our staff that we place with the clients. So these we have to pay right away. So working capital financing is an important one for us, specifically in a strong growth phase. And the acquisition financing, we're targeting through combining equity and debt elements. In terms of multiples, we'll have to pay on acquisitions. We're in a range of 4 times EBITDA because of the asset light and low margin nature of the business. So bringing that or combining that before we can go to the Q&A section, our strategy, as we mentioned, is buy, build, and transform. Targets that we have also announced during our AGM is doubling the 2025 E to 2025 E revenues and realizing EBITDA margins significantly above market. Market average is around 6% on that side. So this is a bit about the management team. Let me skip that and go right to the Q&A side.
Excellent. Great presentation. We have so far two small questions in the chat. So first of all, we saw a bit of a negative operating cash flow. What measures are taken to return to the positive cash flow again?
Yeah, absolutely. It's a great question, very important one. As I mentioned, on the growth side, financing for us is important in terms of working capital. So the negative operating cash flow that you can see in the first half of 2025 is attributable to working capital elements. What are we currently doing? On the one hand side, we are consolidating our and increasing volume and consolidating number of financing partners on the debt side. So restructuring the bank side, and B, we are in parts already working with factoring. There we currently are increasing the factoring lines that we have with our operating companies. And thirdly, and this is the most difficult one, as we all know, we are in talks with our clients in terms of reducing the DSO on their side.
Okay. And a question in the similar vein. So the equity declined partly due to goodwill amortizations. Do you expect further impairments in the coming periods?
Well, let me make sure there is no impairment. So there are no impairments on the Einzelabschluss, as we've heard before. So on in the annual accounts of SDM SE, the holding company, there is no impairment, and we don't expect any impairments there. There will be annual amortization on the goodwill of 1.15 million that is attributable to the HGB nature of the consolidated accounts.
Okay. And you said the whole market is evolving and you see more consolidation in the market. So where do you think SDM is positioning itself within this accelerating consolidation in the market?
Yeah, we want to play an active role on the consolidation side. That said, we will primarily focus on small to mid-cap companies. So if you look at our growth target, this on a linear side, this would mean 15 million in revenues per annum that will grow, and we expect that half of that will come from the organic side and half of that through acquisitions. So if we stick in that range where we are, this would mean about one acquisition per annum in our target range.
Okay, excellent. So looking at the time, it's already noon. So maybe just one last sentence. How can you summarize SDM and why should we invest now?
Well, we are one of the few options if you want to invest in the private security market, specifically in Germany. I would say we are the only option. We are an active participant in the consolidation of the market, and we are in a market that is naturally growing.
Tobias, thank you so much.
Thank you very much.